Imagine a world where your money works for you, even while you sleep. Picture this. You go to bed at night, and while you're dreaming, your investments are busy generating income. This is not just a dream, it's a reality that many investors experience every day. This isn't a fantasy, it's the potential of dividend stocks. Dividend stocks are shares in companies that pay out a portion of their earnings to shareholders on a regular basis. These payments, known as dividends, can provide a reliable source of income, regardless of market conditions. By investing in dividend stocks, you can benefit from the growth of the company and receive regular payouts. These powerful investment vehicles offer a way to participate in company profits, providing a steady stream of passive income. Imagine receiving a check in the mail or a direct deposit into your bank account every quarter, just for holding on to your shares. This passive income can be reinvested to buy more shares, creating a snowball effect that can significantly increase your wealth over time. Whether you're saving for retirement, a down payment on a house, or simply seeking financial freedom, dividend stocks can be a valuable tool in your arsenal. For retirees, dividend stocks can provide a steady income stream to supplement Social Security or pension benefits. For young couples, the extra income can help accelerate savings for a home. And for anyone seeking financial independence, dividend stocks can be a cornerstone of a diversified investment portfolio. By carefully selecting companies with a history of paying and increasing dividends, you can build a portfolio that not only grows in value, but also generates income, helping you achieve your financial goals faster and with greater confidence. Before we dive in, it's crucial to remember that this is for informational purposes only and does not constitute financial advice. Investing always involves risk, and it's essential to conduct thorough research and consider your own financial circumstances before making any investment decisions. Seeking guidance from a qualified financial advisor is always recommended. Dividend stocks represent ownership shares in publicly traded companies that distribute a portion of their profits to shareholders. Instead of keeping all their earnings, these companies choose to share a piece of the pie with investors who hold their stock. These payouts, known as dividends, are typically issued quarterly and can provide a regular stream of income. Dividends are particularly appealing for those seeking passive income, money earned with minimal effort. Unlike a regular job where you trade time for money, dividends flow in regardless of your daily grind. This passive income stream can supplement your primary income, help you reach financial goals faster, and even fund your dream lifestyle. Dividend champions, familiar names, reliable returns. Many well-known companies are renowned for their consistent dividend payouts. Coca-Cola, for example, boasts a 61-year history of increasing dividends annually. Johnson & Johnson, a healthcare giant, has raised its dividend for over 60 consecutive years. These dividend aristocrats, as they're often called, demonstrate the long-term potential of dividend investing. Navigating the dividend landscape. Understanding the risks. While dividend stocks offer enticing benefits, it's vital to acknowledge the inherent risks. Companies may reduce or eliminate dividends if their profits decline or business conditions change. Stock prices can fluctuate, potentially leading to losses if you sell at an inopportune time. Diversifying your portfolio across different sectors and companies can help mitigate these risks. Embarking on your dividend investing journey is easier than you might think. It all starts with understanding the basics of dividends and how they can contribute to your financial goals. Dividends are payments made by a corporation to its shareholders, usually in the form of cash or additional stock. They are a way for companies to share their profits with investors. Start by researching companies with a solid track record of dividend payments and a history of growth. Look for companies that have consistently paid dividends over the years and have a strong financial foundation. This can be done by examining their financial statements, annual reports, and other relevant documents. Pay attention to the dividend yield, payout ratio, and the company's overall financial health. Consider opening a brokerage account, which provides access to stock exchanges. A brokerage account is essential for buying and selling stocks, including those that pay dividends. There are many online brokerage platforms available that offer user-friendly interfaces and low fees. Take the time to compare different brokers and choose one that fits your needs and investment style. Determine your investment budget and gradually build your dividend portfolio. It's important to set a budget that aligns with your financial situation and goals. Start small if necessary, and gradually increase your investments as you become more comfortable with the process. Diversify your portfolio by investing in different sectors and industries to spread risk and maximize potential returns. Reinvesting those dividends to accelerate your wealth-building journey. Reinvesting dividends means using the dividend payments to purchase more shares of the same stock or other dividend-paying stocks. This can significantly enhance your portfolio's growth over time through the power of compounding. By consistently reinvesting dividends, you can take advantage of market fluctuations and potentially increase your overall returns. Reaping the rewards, the power of long-term dividend growth. The true magic of dividend investing unfolds over time. As you hold dividend-paying stocks, those payouts can increase, compounding your returns. Imagine reinvesting your dividends, purchasing more shares, and receiving even more significant payouts in the future. This snowball effect can lead to substantial wealth accumulation over the long term. Disclaimer. Remember, this provides general information and should not be considered financial advice. Investing in the stock market involves inherent risks, and it's crucial to consult with a qualified financial advisor before making any investment decisions. They can assess your individual financial situation, risk tolerance, and investment goals to provide personalized guidance. Embracing the potential of dividend investing is a strategic move that can significantly enhance your financial portfolio. Dividend stocks offer a compelling avenue for generating passive income and building long-term wealth. By investing in companies that consistently pay dividends, you can create a steady stream of income that can supplement your earnings or even serve as a primary source of revenue during retirement. By understanding the fundamentals, researching companies diligently, and acknowledging the risks involved, you can make informed decisions that align with your financial goals. It's crucial to analyze financial reports, study market trends, and review company performance charts to identify the best dividend-paying stocks. You can harness the power of dividends to achieve your financial aspirations. Consulting with a financial advisor can provide valuable insights and help you tailor your investment strategy to maximize returns. Seeing the dividends pay out and watching your portfolio grow can be incredibly satisfying and motivating. Remember, the journey to financial freedom begins with a single step start by setting clear financial goals and creating a plan to achieve them. Whether it's saving for a major purchase, planning for retirement, or building an emergency fund, dividend investing can play a pivotal role in your financial journey. Start exploring the world of dividend investing today. Take the time to educate yourself, seek professional advice, and begin investing in dividend stocks that align with your financial objectives. The sooner you start, the more time your investments have to grow and compound, bringing you closer to financial independence and security.